Could your home equity be the thing that makes your next move possible? If you've owned your Kansas City home for several years, there's one number you should know before deciding whether you can afford to move. And surprisingly, it's not today's mortgage rate, it's how much equity you have in your current home. I understand why homeowners with a low mortgage rate are hesitant to give it up. But focusing only on the rate can leave out a major part of your financial picture. Over the years, you've been paying down your mortgage. At the same time, your home's value may have increased. Put those together, and you could have considerably more equity than you realize. So why does that matter? Because when you sell, that equity could potentially become money you put toward your next home. Maybe it allows you to make a much larger down payment and borrow less. Maybe you're thinking about downsizing and your equity could cover a significant portion of the next purchase. For some long-time homeowners, it could even put a cash purchase or something close to it into the conversation. And that's why I don't think the question should simply be, what mortgage rate would I have if I moved? A better question is, after selling my current home, how much would I actually need to finance? Those numbers can tell two completely different stories. Now, having equity doesn't automatically mean you should sell. Maybe, after looking at everything, staying where you are still makes the most sense, but don't make that decision based on assumptions. Find out what your Kansas City home could realistically sell for, look at what you still owe, estimate your potential proceeds, and then compare that with what your next move would actually cost. You may discover moving doesn't make financial sense right now, or you may discover the move you've been putting off is much more realistic than you thought. Before you let today's mortgage rate make the decision for you, find out how much equity you've already built. Click the link in the description to read the full blog.